Good morning, happy Monday. In this video, we'll take a dive deep into my margin and check how I'm using most of my margin as an option collateral actually to generate an additional income. As you can see here, I have about right now is 174,000 in option collateral. That amount have been decreased a little bit because I just got assigned on my puts on Ford, four of them to be exact. And as you can see, I end up buying for 5,000. Let's dive in. Let's go ahead and jump to my spreadsheet. We will start with the biggest option collateral that I have and take our way down. The first on our list is PLTR. Let's go ahead and go and take a look what PLTR is doing. So as you can see here, the option collateral on PLTR is 45,000, and here you can see all my position on it. I have sold 7 contracts for $20 put that expire on August 16. If we take a look inside, you will see my position here. The day that I opened was 517. The number of contract is 7. The average credit that I received was 135 per contract, and currently is showing unrealized profit of a little bit over 50%. Here are the details for the trade. Let's go ahead and take a look at the second one. Second position is also selling cash secure put on PLTR. The same date is August 16, but this time it's a $18 instead of 20, so we're taking lower risk than that. So obviously, because we took a lower risk, then we are getting a lower premium as well. So we are receiving $80 per contract here. You can see unrealized gain of 63%, even though we just opened a few weeks ago because the stock went a little bit up, and that really played well for our position. Here you can see the details for this trade. Let's go ahead and go back. The third cash secure put that I'm selling here is also for $18, but I took 2 months longer. This is until October 18. You can see I receive a credit of 106 per contract. I have opened 10 contract on it. The date I opened was June 3rd, and I have unrealized gain of 48% or $500.10. You can see here the detail about the option that I opened. And last but not least is the PLTR $20 put. This is cash secure put, of course. I have sold 2 contracts that expire at the beginning of next year. And you can see I have opened this in February, and I received $279 per contract. Currently shows unrealized gain of 38%. And these are the details of the contract that I have opened. So overall, I will say my position with PLTR is in great shape. I'm very happy with it right now. It's all out of the money, and the total possible profit for it is 2,962. As you saw previously, the period is different for each option. I didn't want to put one line for each option because that will make the list very long. Approximate monthly return on my PLTR is 1.65, which is really great. These are from the different premium that we collected for this period. Let's go ahead and jump to the second on the list will be Tesla. For Tesla, we actually have 2 trades on it, one for 18,000 and the other for 15,000. Let's go ahead and jump to Tesla and see what we got. Today is a big positive day for Tesla. That's really great. So if we scroll down here, you will see the option collateral is the 33,000, which is the combination between the 15,000 and the 18,000, of course. Here we have 2 options that we sold. One of them right now is the cash secure put for 180. I have mentioned that in other videos. You can check them out, but here you can see the trade for it. So far, I have collected 1,373 from it. Going back here, because today is a big day, positive, and this one actually expired this Friday. As you can see, I have opened it in March 13. The credit here is not accurate because I have rolled this over. You can see the rolling over here from the 190 to 180. And the premium that we paid and the premium we received, and this is the total credit. Again, this is we have a full video about that, and you can check it out in my channel. Right now it shows unrealized gain of 92%, and as you can see, it doesn't have much left in it, and I really like playing Tesla. So definitely this week, depends on where the price end, I might either let it expire out of the money and then sell newer one next week, or I might roll it over. As you can see right now, if I want to roll it over, it will cost me somewhere around $158 to buy, and then I will go something around a month and sell a new one. So in this case, if I wanted to sell at the same strike price, I will collect $600. just for waiting another month. That's just great. It's a great return on the $180. So if we bring the calculator and we said 600, let's say, divided on the 180, that will result in 3.33 just for waiting for 1 month. It's absolutely amazing. I love that. That's why we love playing Tesla, man. So let's go ahead and go and check the next trade that I have on Tesla. So here I have sold a Leap cash secure put. So you probably already knows about Leap calls. When you buy a long call but it's expired in a year or two, you can do exactly the same with selling puts. So here, as you can see, on January 24, I went ahead and I sold all the way to January 17 of 2025, a full year, and I have sold the 150 and bought as a protection for me and to limit the downside, and the cash collateral, the 100. So in this case, I am risking a maximum of 5,000 per contract while I'm receiving 1,137 per contract. It's really great for me. I'm very happy with it. I have 3 contracts right now open, and I have unrealized gain of 25% or 873. Absolutely great. I'm very happy with my position. That's why if we went back here, I have both of these in good and great position. Actually, because today's stock rally hard, I will consider this to be a great as well. You can see how much credit I got, and I put it as a potential profit. You can see the period that I have been open and the monthly percentage return on my cash collateral. Here I am collecting 2.54. I included the credit from this trade for the rolling over because it's all tied together, and I increased the period for the total amount. Here it's 1.8 for 12 months. Like, it's not only a great return per month, you already locked a return for 12 months. For a full year, you are getting 1.8%. Like, if you analyze that, which you are getting here, is not even theoretical. That's 21% per year on your money. If you have watched my video about compound interest, you know how that can escalate really big, really quickly over a few years. So I'm very happy with this. The next on our list is TQQQ. So if we went to TQQQ, you will see I have a cash collateral here, 28,000. I have sold the $30 put that expired next year, also a Leap, the $30, the $40, and the $35. So let's go ahead and take a quick look on each of them. As you can see, the first one is the $30 put. I have opened it on February 28. I have received a credit of 196 per contract. The expiration is the beginning of next year, and I have collected unrealized gain already 60%, $354 here. And here are the trade for both of them. You can see it quickly. It has all the details for what I have opened, the day, the price, and everything. Let's jump and take a look at the TQQ $40 put. I have opened it also on February 28 and expire beginning of next year. I have collected $373 per contract. Obviously, a lot more because this is a $40 put instead of a $30 put, or cash secure put, I should say. I have a 3 contract here. I have unrealized gain of 52%, and the unrealized amount is $582. Absolutely great. Here you can see my history. It includes the 3 trades that I opened, the day that I opened, and how much premium I collected in each one of them. Let's go ahead and jump to the last TQQ. It's a $30 put. I have also opened it on February 28, expiring in beginning of next year. I have collected an average credit on it of 276. Right now it's unrealized gain 50% or 277. If we scroll down, we can see the rest of the details. So overall, I will consider my TQQ position. It's in a great position. It's out of the money right now. As you saw, the potential profit is 2,259, which is the premium I collected from selling these Leap puts. You can see that I have sold them for a total of 11 months, which is really great. We have generated about less than what we generated with Tesla. I'm happy with it. I can close it right now and collect half the profit for just a small period of time without waiting the entire amount. Of course, if the stock rally continue to rally, I reach collected 80% of the profit, I might go ahead and close it instead of waiting another 6 months just to collect another 20%. I can easily use that cash to sell cash secure put on a different name that I'm interested in that might generate higher return. The number 5 name on our list is SQ. As you can see, the amount of the cash collateral is 23,000. Let's go ahead and take a look. So SQ today went down. That's really great for me because I have some calls that are expiring this Friday. So I'm happy with it. I'll be able to collect more premium for rolling over or just for letting it expire out of the money and then selling a newer one. But going back to focus on the puts, the first one we have is a $60 put that expired this Friday. This was a short trade for me. I just opened it last Friday. I have sold the $60 cash secure put. I took the opportunity since SQ have been dropping significantly over the last 3 months. So it's, for me, this is a good price. As you can see, because it went down today, I went back to break even. This is the details for the trade. So I'm collecting 1% basically in a week. If the stock went down, I can either roll over the cash secure put to a later date, maybe a month and a half, and collect more premium, or I can let it assign and then sell cover call on it. These are the 2 leap put that we sold on SQ. These are longer time frame, of course. Let's take a look at the details. I have opened it in February 15. I have collected $795 per contract, which is great. You know, that's the power of a leap put. You can generate a lot of return. It's expire on January 17, 2025. So that's like 11 months. As of right now, the total return are still slightly positive with just 4.65% or $37 per contract. If we go down here, we can see the details of the trade. Let's go ahead and jump to the next one. Is the SQ $55 put. This is a little bit safer than the $60 put, obviously, because it's a lower strike price. I have opened it on February 15 and it's also expire in January of next year. I've collected $645, slightly lower than the $60 put for the obvious reason. I have 2 contracts on them. I have unrealized gain right now of 17%, which is about $220. We can see here the details of opening these 2 cash secure puts. So for me, SQ is also in a great shape, even that it have dropped significantly. Let me show you how much it dropped during this year. You can see here, it's have been like going up and down. At the beginning of the year, it was 75. It dropped as low as 62. It went up as high as 85. Right now, it has been going down for the last 3 months. As you can see, it went down like 23%. But all my cash secure put are still out of the money. The possible profit or the premium that I collected is $2,149. The average monthly is 8.4. I just reduced it because I have the one cash secure put for a week, but the rest of them are all 11 months. We are collecting 1.11% per month on our cash collateral, which is, I'm very happy with it, you know. The next on our list is Ford. I have 11,538. Actually, it's a lower cash collateral because I just got assigned on 4 of my puts. So let's go ahead and open Ford. Today is a green day for Ford, so that's good. Position went up to 800 share. It was previously 400 share, and my cash collateral went down because I got assigned 4 of the puts, even that it's expired this Friday, not the previous Friday. If you come here, you will see this is the notice for the early assignment. All of my Ford cash collateral is in one trade. As you can see here, I have still 5 contract open to purchase for $12.82, while the price right now is $11.80. It's like $1 lower than where I'm buying it. So of course I have unrealized gain of close to 50%. So if we take a look at the history of it, it was part of a rollover that I have been doing for a while and collecting premium. I have sold it several times so far. I also increased it from 8 to 9. This was just an additional one I sold at the end. And you can see here the early put assignment that I had for 12.82. I don't mind getting this early assignment at all. I actually took advantage of it since I had an extra 400 share. I went ahead and I sold cover call on these shares. I went ahead and I chose the August 16, which is in 2 months. I sold the $13 cover call and I have collected $20 premium. So in this case, I made premium from selling the cash secure put. I made premium from selling the cover call. If the stock rally, I might gain the profit from buying it for 12.82 and then selling it for $13. And finally, as a bonus, there will be definitely dividends in July probably. So I'll collect 15 cents per share. So you can see, like, using the weird strategy, I can take it to my advantage even when the stock play against me and the stock drop down. As for the remaining 5 cash secure put that expire this Friday, I'm aiming to maybe buy to close them by this Friday and then roll it over all the way to September. That is 3 months, and collect about 30 to 34 credit. If forward price continue to rally during this week, I will definitely get a better deal. I might even decide to roll it over for 1 to 2 months instead of 3, or continue with the 3, but I will definitely get much more premium. Okay, so that was all for Ford. I need to update this to lower the amount, but I would say the start is not good since the stock have been going against me and it's in the money. Ford doesn't have as high of a premium as Tesla or PLTR, so it's not really easy for me to roll it over and down. So in this case, as you saw, I'm probably gonna roll it over for the same strike and collect more premium while either waiting for the stock to go up, or I might get a sign later on and then just sell cover call on it. Possible premium is 714. The approximate period is 3 months, and I'm collecting about 2% per month. That's including the rollover, the 474 plus the 222. The next one on our list is Robinhood. Take the symbol HOOD. I have a cash collateral of 7,500. Let's go ahead and jump to Robinhood. Today, Robinhood went down about 1%. If we go down here, you can see my cash collateral is the 7,500. Let's take a look at the Robinhood cash secure put details. So if we scroll down here, I have sold it on May 31st. I have opened 5 contracts and I've collected about $42 credit per contract. Currently, it has unrealized gain of 52% or $110 on all 5 of them. If we scroll down to see the details of it, you can see here the time, the sale, and everything. So Robinhood, for me, I consider the status right now as great. It's out of the money. I have collected 210 premium. Time until expiration is 3 months, and I'm receiving about 0.93 per month on my cash collateral. The next one on the list is my gambling trade, AMC. I have 5,415 cash collateral right now. Let's go ahead and open AMC. So if we scroll down here, you will see the cash collateral, 5,450. These are on really two trade, the 5.5 cash secure put that I have expiring this Friday and the $4 put that expire on June 28. Let's take a look at the 5.5 cash secure put that I sold for AMC that expiring this Friday. As you can see, if you have saw my AMC videos, you know I have rolled this over from $6 put to 5.5. I have collected premium both cases. Let me check the spreadsheet quickly here. You can see the first time I have sold it for $6, I collected $78 per contract. And the second time I roll it over to 5.5, and I also collected a credit of $35 per contract. So I'm already positive because I have received $113 per contract, while right now it cost me $64 to close it. Here you can see the details of the last rollover. Since AMC price are very volatile these days, I'm probably able to collect a premium while rolling it over. So if we went to the put and we said we want to buy to close and sell to open in like 1 month, you can see here I can go to the $5 and I reduce my obligation from buying for 5.5 to buying for 5. That means I'm saving myself 50 cents per share or $50 per contract. I can also roll it over on the same strike if I wanted to and collect much more premium. As you can see here, I can collect about $52 per contract for having the same risk. I will wait until Friday to make my decision whether I want to roll it over for 5.5 or I want to roll down to the $5. But it's great to have options. And we are talking just about rolling it over for 1 month. If you roll it over for 2 or 3 months, you're definitely going to get offered more premium. The second AMC contract is the $4 strike cash secure put that I have sold on May 24th. I've collected $46 and I have 4 contracts open. It's currently unrealized gain of 84% or 156. So yeah, as you can see here, it was part of my rolling over. So I have bought to close the $5 put and sell to open the $4 put, reducing my obligation by $1 per share or $100 per contract. I've collected $15 credit per contract, and since it's 4 contracts, that resulted in $60. This is also part of my AMC gambling video, which if you want more details, you can just watch that video. I will link it to this one. Overall, I will assess my AMC position as good. It's at the money since the 5.5 is very close to the money right now. I think we said is 5.06. I have collected a very, very good premium, 1,167 for a month and a half. If you see the total return per month is 14% on my cash collateral, and that is for a good reason. It is very risky trade. It could easily go against us and create such a big losses, especially if the stock died out and the squeeze stopped, then the stock can stay under my average for a very long time. The next on our list is Netflix. If we went to Netflix, you will see that I have a credit spread on it. I have one contract on Netflix. I'm selling the 350 cash secure put and I'm buying the $200 put. The difference between them is $50 per share or $5,000 per contract, and that is basically the collateral that I have. I have collected $1,679 premium, which is amazing. This is, however, not for a year, but it's for 2 years. As you can see, I have sold it on September 15, 2023, and it's expire on January 16, 2026. This is not 2025. Right now, the position is 80% unrealized gain. I should be actually looking to close this over soon. However, it's not easy to close it over because the bid and ask for these two contracts are very wide since they are far away in date. So if we went ahead to the 350 put, you will see the bid is at $10 and the ask at 11.10. That's $110 difference between the two. And same for the $300 put. Oh, look at this, painful. 555 or 5.55 as a bid, and then the ask is 9.35. So that's probably the main reason why I couldn't close it over to collect the 80% unrealized gain and make it realized. It's because I'm gonna have to sacrifice so much that I keep saying it's not worth it. I tried in the past to close it over a few times, and you can see here from the history that it got canceled since it didn't go through. However, I haven't been able to close it for the price that I want to pay. Let's go ahead and go back to the spreadsheet. I will say this position is absolutely great. It's out of the money. I collected the 1,679. Now look at this beauty. It's in this part. I have locked 1.24 return on my cash collateral for 27 months. That is absolutely great. You know, if we brought up the calculator, 1.24 multiply by 12, that's a 14.88% return on my money per year. And here I'm collecting for 27 months, which is over 2 years. Next on the list is I have a one cash secure put right now on for 5,000 collateral. Let's open this quickly. As you can see here, I have sold cash secure put on on April 5th for a credit of 96. The strike is $50. Of course, and right now it's unrealized gain of 98%. I can close it for $5, but I definitely not going to do that since it's going to expire out of the money. Here you can see the rest of the details. This was the second cash secure put that I sold on reality income and expire out of the money, so I'm happy with it. If reality income gave me additional entry point to sell a new cash secure put on it, like either the implied volatility went up or the price dropped close to 50, I will definitely sell a new cash secure put on it. But right now, I don't think it will generate enough premium for me to justify selling another cash secure put on it. Of course, the position here is in a great shape. It's out of the money. I collected $96 for 2 months and a half. That's a return of 0.77. The next one on the list is Google. For Google, it's a small position. I only have 4,000 collateral. Let me show you. Here on Google, you can see I have a 2 credit spread offering cash secure put for 120, and I'm buying protection for myself for $100. So I'm risking only the $20 between the two per share or 2,000 per contract. Since it's multiplied by 2, that's where the 4,000 come in. I have sold it on December 28, 2023, expiring on January 17, 2025. So as you can see, it's over a year. I've collected unrealized gain of 84%. You can see here the details of my contract. My position was with Google is in a great position. It's out of the money, 720 in my pocket for 11 months. I'm making 1.64%. The next one on the list is MPW. If we went to MPW, as you can see here, I have the 3,700 cash collateral on it. I have a $1 put, 10 contract, I have 3.5 puts, 2 contract, and I have a $4 put, a 5 contract. So let's take a quick look at the details of each of them. You can see here the date is open, date expiration, the total premium collected is very small, but it's also a very small bet on my side. And you can see here the detail about this contract. Let's go ahead and go to the next one. Here is the $4 put. You can see the dates open, date expire, the credit collected, and here are the details of this contract. And lastly, the 3.5 puts. I have two contracts open on February, expire next year, and collected 79. Here are the additional details. Overall, MPW is in a great position as well. It's out of the money. I have collected the premium. I'm collecting about 2% per month for 10 months. That's absolutely great. 2% per month. What is that? 24% per year. Amazing. The next one on the list is OKLO. It's part of my gambling trade, and you can see the details on my AMC latest video. Let's go ahead and open it quickly. If we scroll down, you can see the cash collateral, you can see the 3 puts, you can see the total unrealized gain here is 61%. Since it's a small position, I'm not going to dive deep into it. If you want more details, you can check my other videos. The position is in good position. It's at the money and it's a risky stock, so hopefully it plays to our advantage. We collected 433 over 2 months, and that resulting in 6.66 return per month. Again, it's a higher return because it's a risky stock. The next on the list is Intel INTC. This is the second position that I have that I'm down on. I have 3,000 collateral from my credit spread. Let's go ahead quickly and go to Intel. As you can see here today, Intel is slightly green, but that's about it. I have here 3 credit spread that I have sold. If we go ahead and open it, you can see I have opened it on April 5th, and I collected $306 per contract. That's for selling the cash secure put for $35 and then buying the $25 put to limit my cash collateral and act as a protection for the downside. So I am risking $10 per share while collecting 3. Right now it's in the money since currently the stock price is $30.50. So I have accurate unrealized losses of minus 61% or minus $564. Here you can see the details about the 3 contracts that I have opened with the date. Since it's a credit spread, we are limiting the amount of cash collateral, which increase our monthly return. As you can see, it's 3.4 per month for 9 months. Right now it's working against us, but we have plenty of time to see if the stock will play to our advantage. And our risk is limited to the $10. So the worst case scenario, we will go down $10. We collected a 3. That means we are down $7 per share. We don't want that, but that is the worst case scenario. The last one on the list is HRZN. It's the smallest cash collateral that I have. It's only 2,000. It's in a great position. It's a monthly dividend stock that I have been selling cash secure put for $10 on it. And you can see the last one I have opened on March 22, expiring on October 18. I have collected $65 per contract for 2 contracts. Right now it's unrealized gain of plus 56%. So this is out of the money. It's a great position. I'm collecting about just a tiny bit above 1% per month for 6 months. That's not bad. So this is the full list for all my cash secure put and credit spread that I'm using my margin just to generate an additional income on it. You can see the return per month on each of them. Some of them is as high as 14 and 6%, but these are very risky. I will consider one of the best one is Tesla to generate an additional, a little bit safer compared to AMC or different names, since Tesla is a real company, has profit, is growing, and if the stock went down for 6 months, a year, you can carry the stock and then sell cash secure put against it. It will always have a good premium. If you also notice that selling leaps is really a great way to generate income on your cash collateral, because even if the stock went down and your cash collateral became in the money, most likely the cash secure put will not get activate on you, and the stock might just recover at the end, and you get to keep that sweet premium that you collected at the start and get your cash collateral release at the end, and you just repeat the process. Rolling over for a credit is an important step in this strategy. You have to know how to do it. You have to know how to tune it to your advantage. If rolling for a month or 2 didn't work out, then don't be afraid to roll it for 6 months or more. So that will be all for today's video. I hope you enjoyed it. Please hit the like and subscribe to the channel if you like this video and want more content. If you have any question, please leave it in the comment. As always, the content in this video is for educational purpose only and should not be constructed as a financial advice. Investing investing involve risk, including the potential loss of principal. It's even higher when you use options, and it's even extra higher when you use option or margin. So please keep that in mind. Only use a tiny portion of your margin. Thank you guys. See you in the next video.